Welcome back, everybody. My first week trading with a $5,000 account has gone pretty good. In fact, it looks like our account is actually up about 5% on the week, which is pretty nice. During this week, I did a little bit more trading than I would have thought I was going to. I was able to close off some bearish positions for some realized gains. I did do a quick day trade on SPY when I saw a pretty good setup, and I realized $104 on the week on a $5,000 account. So pretty good results so far. Looking at the option trades, here's a quick overview of the trades I did. Last week I put on an Amazon bear or bull put spread. This is probably the one position that has actually hurt me right now the most. But even then, I'm out of the money, so it is in profit town. But because it's so much closer to being at the money now, I'm actually down about $100 on this position. Uh, Microsoft this week, I did put on a bear call spread when Microsoft was sitting around 230, along with a bull put spread. Microsoft continued down, so I was able to close the bear call spread for a little profit. And then I still have the bull put spread on. Netflix, similar story. I told you I was going to try to get more bearish positions in, and Netflix just seemed like it was set up pretty good. And I was able to get so far away from the money to put the spread on. And to be honest, I kind of wanted to leave it on, even though there's only $16 left to get out of this position. So Netflix went down, obviously, so I was able to close this for a pretty nice gain. It's time to leave it on, but why would I risk $500 or sorry, $425 to get $16? So that's why I kind of closed it down. And then NET was a quick play that I put on because someone else in the Discord server pointed out. I did some quick research on the stock. I liked it, so I did a bull put spread. I think it got pretty safe. This is more of a chart play than anything else, and we'll look at that in a second. And then Friday, I did do a bear call spread on SPY for a quick day trade. So because there's two legs to this, that's two day trades against my account. I think I get 3 or 4 before consequences come. So 3 or 4 within a 5-day window. I should probably look that up now that I have to actually think about that when I'm making my trades. A day trade is when you do a round trip on the same day. So buying or selling a position on the same day will count as a round trip. So 2 legs, that's 2 day trades. Let's go ahead and look here. You can see $104 realized. Let's look at the actual count right now. So here you can see the accounts up to $5,292. The positions I still have on are all my bullish plays. The one that's closest to the money is Amazon. I think it's trading at like 90 and 80 cents. So it's right at the dance floor. But we have 34 days for it to be right. I'm going to sit this one out and see what happens. If it gets back into the profit, I may close it out and then readjust, get further away from the dance floor. But right now, I'm just going to let it play out and see what happens. And Microsoft, we're still pretty far away from being at the money. So even though this position is showing a $40 loss, not too worried about that one. And NET, we'll take a look at that on Thinkorswim. Show you the trade log here. So you can see I'm not just making up these positions. So with the Microsoft bear call, I actually bought to close the short position first, and I was thinking about just leaving the long position on to see if Microsoft does run, maybe I'll get more money that way. And then as I thought about it further, I was like, wait, so it's a free play basically because I got back the amount that I bought the long call for with the call that I sold or that I closed earlier, so for $90. So it was basically like a $4 free roll is the way I was thinking about it. And I took a timeout. And I was like, wait a second, no, it's actually worth $27 right now. Would I buy a Microsoft 265 call this far out of the money for $27? The answer was no, so that's why I closed it. So sometimes doing that like inverse thinking of if I didn't have this position on now, would I put it on with the current price? That might help you come to a different conclusion, and that's exactly what happened here. The logic behind that was the 265 is just bought insurance in case for some freakish reason 260 got breached. So the fact that I put it on thinking it'll never get hit, why would all of a sudden I think it's going to get hit, especially since the stock just went down? So that's where that kind of thinking went. I'm going to move this to the side over here. And then we'll pull up Ameritrade. and look at some of these charts. All right, so here's Microsoft. Sorry, there's a lot of lines on here. But basically, for the call side, I was looking where would Microsoft have a hard time getting above. And I was using the volume profile here. You can see 255 area. It should kind of hover there if it does breach that or get towards that. So that's why I chose 260 for my bear call spread. And I also made it a little shorter DTE wise because I think it's more likely to go up than down, even though it does seem like we're in a bear market right now. I tend to be more bullish than bearish. So it's easier for me to go bullish, which is why I was looking at that. To the downside, when I put this trade on, we're actually trading around here. And also know that we were just out of earnings and there was a couple of days past, so they were kind of floating there. To the downside, I found my level by going back 3 years and looking at the volume. And you can see like down here at 215, there's a lot of volume or price action that happened like a couple of years ago. So I'm hoping that that level's still there. So I'm getting down to the 200, which puts me about 15 bucks below where that support might be. That's where I got that other play from. And again, when I put these on, so when I'm putting these on, I'm basically looking at 35 to 42 days out. And what I'm doing when I'm putting these on for the bear put spread, I sell the one that I want to do closer to the money, and then I buy the one $5 up. There's my $5 spread, and try to get a decent fill. The numbers have changed. This is aftermarket, so these numbers don't reflect what would happen. For the call side, the one close to the money is the one that I sell. The one that's further from the money is the one that I buy. And obviously, the one I do is actually 260. You see that's worth a lot less than when I first bought it. Next play we'll take a look at is the Netflix. All right, so for Netflix, I want to go bearish on it because I think it's a little overvalued. And when I was looking at the volume profile, I thought that if it did go to the upside, 345 would be a sticking point. That could be when I would manage the bear call spread. It also has to go through this price action here to get up there. And since I was actually bearish on this to begin with, I thought it was a pretty safe play to be up at 260. And the volume just goes up, or the price action to get through here just goes up. So I think I would have time to actually manage the position if it did get approached. Now, at the same time, over here you can see RSI was completely overbought. So another indication that it might go down. This is just kind of the things I was seeing in Netflix that made me say, let's do it. And that's why I put that one on. The next one is NET. This is one that Invest to Retire, who's their Discord options server, brought up to my attention. I don't know too much about NET. I did a quick Google search and learned a little bit. Their market cap is a couple billion. They have decent revenue, but their earnings is low. And this one, I actually went back about 3 years to see where I could find some support at. So he's doing a risk reversal, which is a pretty neat trade. I think I made a video about that a while ago. But since I'm a small account, I can't do that, so I had to go with my spreads. So going back, I saw that had a lot of volume to get through at 40. And then below that, even like 30 is a sticking point. So that's why I decided to go really low, 30 to the 25 put spread. And it was still like 30 cents credit. So I feel like that's just a free 30 bucks for putting on. This is after earnings. They got demolished after earnings, even though they beat estimates. What's going on there? So it just seemed like an opportune time to sell a put. Since I'm a small account, I had to sell a put spread. I was debating about doing the 35.30 for, I think it was like at 95 cents credit, which would have been nice. But since I didn't know too much about the company, and this is more of like a chart play, I decided to get a little safer and do the 30.25. The last thing I did was SPY. And this one was a quick trade. Let's go to the 1 year, 1 day. Actually, let's go to the 1 minute. So on this one, I traded SPY about here. and it looked like we had a high. We developed a second high, so a lower high, and that's kind of what made me decide to go bearish on it. I thought by lunchtime I'd be able to close this one for a profit. Had I had a bigger account, I would have done a wider spread. But in order to make it just a $300 bet, I had to pay a little bit more premium to buy that protection. Whereas if I could do 5 wide on that, it would have been like 2 cents for the protection. A little $6 difference if I would have done that. Anyway, I sold that call spread and immediately it was in the profit. I let it ride until lunch and just closed it out. I think I closed it out like about here. So it was just easy money. And that was just, again, a day trade. It doesn't really fit the strategy I want to do with this account, but it was just an opportunity that I wanted to take advantage of when I saw it develop. So I did. With that said, I think we just covered all the positions. I had a good week. I hope you guys did too. And if you like this, subscribe and give it a thumbs up. And I'll see you guys next time.